if you're young and you have ambitions to something bigger, don't make that ambition your end goal. Just focus on the daily wins, right? So just stack the wins, stack the small wins together. Those small wins then translate to bigger opportunities. Bigger opportunities translate into that end spot that you want to get to. And I think that's something I took from basketball back in the old days. Is they, as you know, they don't put you in as a freshman to go and shoot 20 times. They put you in and say, just don't screw it up, And then they say the next time, if you don't screw it up for a minute or two, they put you in and say, okay, go get a rebound. Okay, get a rebound. Next time they put you in and say, okay, you can take a shot inside the lane. Yeah, one shot. And then eventually you get to the point where you're the guy that gets to take all the shots.
Yeah, it just happens gradually. Today's guest brings both athletic discipline and financial insight to the world of investing. Dave Butler. Dave, it's good to see you.
Thanks, Kyle. Appreciate it. Yeah.
Co-chief CEO of Dimensional Fund Advisors at 6'9", like a legitimate 6'9". Dave just walked up on me and I said, this is be him. But at 6'9", Dave was a standout basketball player at UC Berkeley and was drafted by the Boston Celtics before a player strike redirected his path overseas. After an injury ended his professional basketball career, Dave returned to earn his MBA and began what would become a remarkable 30-year journey in finance. Since joining Dimensional, Dave has helped guide the firm's growth from managing under $10 billion to more than $900 billion in assets. That's a real number?
Yeah, $920 billion this morning, I think.
You gonna have like a big party when it hits $1 trillion?
Yeah, absolutely.
You remember that movie, what was it, The Social Network? It was like about Facebook and Zuckerberg. When they hit a certain amount, they had this crazy party. Yeah. I want to be invited back for that, okay?
We'll invite you.
From 50 employees to 1,500 worldwide, under his leadership, Dimensional has become a global investment powerhouse, the largest issuer of active ETFs in the world, grounded in academic research and focused on delivering better outcome for investors. A passionate advocate for investor education, Dave has spent decades challenging conventional wisdom in finance, from the illusion of expert prediction to the limitations of index investing, and pushing the industry toward client-centered, evidence-based solutions. Dave, welcome to the Matthews Mentality Podcast.
Thank you. Really excited to be here, Kyle.
I'm excited to be here. We are actually in your headquarters here, right outside Austin, Texas, in this incredible studio. Zach, we gotta level up, dog. Yeah, we gotta.
I have to admit, as I said, I didn't know this was over here, actually. So
that's when you know you made it. There's a studio in your office. You're just like, I've never been over there. I mean, just the building itself is magnificent. The view is incredible.
Yeah.
But why don't you share with the audience or talk to the audience about Dimensional Fund Advisors? Like, what do you do? You can talk high level. You can talk in layman's terms.
Yeah, I'll try to keep it as simple as I can.
Sure.
We're a asset manager. So we focus in on public equities, public fixed income. As it mentioned in the bio there, when I started, we were about $9 billion. We're now $920 billion. And really what we're focused on is trying to outdo indexes. So when you look back at the history of the firm, the founders were the folks that were academics at University of Chicago, MIT, and so forth. And they did a lot of work on data. So data scientists looking at statistics and data, and particularly on the performance of active managers. So an active manager being somebody who would go in and pick stocks for a particular fund. It turns out when you looked at the broad data over 50 years that there wasn't really any value add from that activity. So that led to this concept called indexing, which I think we're all familiar with now. Indexing is this idea of broad diversification, low cost, tax efficiency, buy every stock and just hold on to it. That's the concept of indexing. So the original founders, the founder of Dimensional, started back in the early 70s. They launched the first index fund at Wells Fargo and American National Bank. And then in the early 80s, they continued on and found more research that talked about these premiums in the market. Small cap stocks outperform large cap, and value stocks outperform growth stocks. And they launched Dimensional Fund Advisors in 1981 with the idea that they wanted to index small cap stocks and offer that to institutional clients. So that was the start and the origin of Dimensional. So the basics of Dimensional really are foundationally those of the index approach. So low cost, diversification, tax efficiency. And then what Dimensional does is we kind of add a bit of a twist on to make it really simple. We look at flexibility as being important. So we implement and we trade the portfolio daily. So if you have to kind of push me into one line about what Dimensional is sort of Dimensional is index plus. So our business is built around the idea that we can give you index type returns, but then a little bit more based on the way we trade and then we implement. And so as David Booth, the founder, will say, we have a business because we've been able to do that. We have a 45-year track record around beating indexes. And I can kind of rattle off a lot of the numbers that support that. But obviously, going from $9 billion to $920 billion, there's been enough success there that assets have been moved our way, and we've gathered enough assets to make the business almost $1 trillion business.
So an index again, I'm in real estate, not equities.
Yeah.
An index is you're betting on the market or on an industry as opposed to an individual stocks and trying to say, okay, I think I know which company will do well. You're more saying, I think this industry or just the general market will do well.
Correct. It's funny. We get into our speak, when I talk about investments, and it's like we think, oh yeah, this is obvious, but it's like,
you got to dumb it down for me.
It's like a football guy or a basketball guy talking about 2-3 zone or this, that, and the other.
But, exactly.
Before saying, you got to put the ball in the basket first, right?
That's right. Well, we'll talk basketball.
I'll say indexing. The simple one and the one that people will know is the S&P 500, and the Vanguard 500 is probably the biggest name out there, biggest retail name. But that portfolio basically owns 500 stocks. So an actively managed fund would go into that area of the market, those 500 stocks, and select the best 20 or select the best 50. And that was historically the business, which is what we call active management. Indexing, on the other hand, says, we don't know which stock is going to be best. We're going to buy all 500, and we're going to keep our costs very, very low, and we're going to try to minimize the frictions around capturing the return on that asset class or that area of the market. So that was really the concept of indexing. And the proof of that was that the data over 50, 60, 70 years now showed that there wasn't really a value add from going into those 500 stocks and trying to pick the best 50. People can't do it. And that is a reflection on what we call market equilibrium, market efficiency. You probably have heard that term. That just suggests that prices reflect information in a very fast manner. And you and I and every other stock manager out there have a hard time outperforming the market on a regular basis because that market, that information processing machine is so good about putting price
so efficient
and so efficient that you just can't quite beat it on a consistent basis.
Yeah, we got close to 1,000 people at my company, Matthews, and a lot of them are younger professionals and for the first time starting to, create wealth. And they'll ask me for advice. And again, real estate, I got strong opinions, but they'll say, what about stocks, equities? And I give them my disclaimer. I'm not a financial advisor, but I said, look, I don't know anything, but if you're asking my advice, I said, first of all, speak to an expert, not me, but whether it's a S&P, I said S&P 500, whether it's index fund, Vanguard, I'm sure you guys could do much better than that. But I said, just historically, I try not to pick individual winners. I just bet on the market.
That's the best advice you can give them. I mean, it's
right.
First thing we always say is there's, experts are not really that expert. So it really depends on what your expertise is. We at Dimensional, we're data scientists. So we look at the data. We look at the returns in the market over the last 100 years. The easiest thing I could tell my son, who's 23, we were talking about him earlier, is that the markets have returned 10% on average over the last 100 years.
So you compound that.
The data is there.
Big numbers.
Yeah, there's something called the rule of 7. That basically, if you get a 10% compounded return, your money doubles every 7 years. So I think about like these young guys that are now playing what we used to play, which is college sports. And if you get $1 million and you're 21, look, if you can put your money into the market and get 10%, which you should, and avoid the kind of the turnover and the taxes and things that come with active management and actively managing your portfolio, that thing's going to double every 7 years. So at 28, you're going to have $2 million.
Just don't touch the principal.
Exactly. 35, you're going to have $4 million. At 42, you're going to have $8 million. And by the time you're 65, you're going to have a significant amount of money. So the tough part for young people, particularly, or really every investor, is to avoid the emotion that comes with investing. So
the FOMO.
Yeah, the question you had this morning, like what's the Fed going to do? Nobody knows what the Fed's going to do, and nobody knows what the reaction.
I don't think Jerome Powell knows what the Fed's going to do.
Yeah,
I always did throw a dig in.
More importantly, nobody knows what the market's going to react, how the market's going to react to that. They're going to think that they had an assumption of what Powell was going to do, and then it's going to be either below that assumption or above that assumption. The market's going to react that way. So, the difficulty in investing is nobody has a crystal ball. Nobody can look into that crystal ball and make predictions about a particular stock or about what market's going to do, or if Trump puts tariffs on, that's what that's going to do to the market or not do to the market. What we've seen historically is people just don't have that ability. So that's the beauty of indexing, and that's the beauty of not trying to time the market, not trying to pick stocks. Invest your money, deploy your assets properly, and then minimize friction, minimize tax, minimize cost, minimize turnover, and you're going to be fine as an investor.
Do you have an opinion on what a balanced portfolio looks like? I know historically it was, 60% equities, 40% bonds or fixed income. Like, has that? I've seen conversations where people believe that ratio is changing. Do you have thoughts or opinions on that?
I think it's everybody's got an opinion, of course, and I think people are going to try to find some optimal answer to those types of questions. I've talked to enough Nobel Prize winners through my career here, and there is no optimal answer. The optimal answer is dependent on the individual person. So 60-40 might be a great portfolio for an average investor who's 35 years old. If you're talking about my dad, who's 89, 60-40 is probably not the best answer. It's probably something on the order of 90% fixed and maybe 10% equity. And if you're talking about the 23-year-old kid,
just let it rip.
It might just be opposite, right? 100% equity, 90% equity. So there is no optimal answer, and people are trying to find some optimization are going to have a difficulty with that. I do remember a conversation when I first started Dimensional, my first day. One of the Nobel Prize winner, a guy named Merton Miller. He said three things as an investor. He said, one, costs matter. Two, he says markets work. And three, diversification is your buddy. So what I tell people is diversification is your buddy. You have to be diversified. And that means small cap stocks, big cap stocks, international stocks, emerging stocks, U.S. stocks. And you can, throw in some private equity if you need to, or some kind of alternative if that's something of excitement to you. But diversification is really the key.
The only other piece of advice I give for young people is anytime the government gives you a tax benefit, right? Yeah. Whether it's pre-tax, post-tax, 401k, IRA, Roth IRA, take advantage of it, right? And maximize, especially if your employer will contribute alongside you, just like whatever you got to do. You got to skinny up your life. You got to get a slightly worse apartment. You can't eat out as much. Maximize that. Do you have opinions on what's the best path to do that? Again, is it a traditional 401k? Is it some other retirement vehicle?
Yeah, I think it's the old analogy of don't handle the soap as much as as little, and handle as little as you can, because the more people that touch that bar of soap, the less you're going to have. So I think any type of vehicle, whether it's a 401k or an IRA or anything else, you as a young person, you want to max that out, because look, if you have a chance to compound, and if you're compounding at 10%, but if the government takes 20% of it and you're only getting 8%, that 8% and 10% are really different in terms of their kind of end, terminal wealth, right?
I can't remember who said it. It was just, was it compound interest is like the eighth wonder of the world?
Yeah, Einstein, I think it was,
See, I was talking to Zach. I was like, Zach, you need to be doing this.
It is true. It is very true.
Do you guys have a minimum client size here?
We work with financial advisors. So one of the things we started in 1981 with just big institutions. So state, sovereign wealth, those types of entities, pension funds, endowments. Okay. In 89, and I started in 1995, but 89, we started working with financial advisors to work with individuals. So we buy into this theory that, Dimensional is a capital market expert. So we do all the best work on the fund side and the ETF side. And then we think these advisors are the expert in the individual space or the client space. So we work with independent advisors. They choose to, use dimensional funds with their clients, and we look at them as really the experts. So advisors do all the stuff that I'm sure, if you have an advisor they do tax work, they do estate planning, they do charitable giving, they work on family legacy and family dynamics. They're kind of really a part of the overall client experience that I think really makes a lot of sense. So we don't work directly with individuals. Our ETFs are available on on as a public security. So if you wanted to buy a dimensional ETF, you could do that. But the bulk of our work, the $920 billion has been through financial advisors.
You're a co-CEO now of this very, very large company, very successful. I want to go kind of through your story, your personal but professional career arc, and see what lessons, what the audience can take away. Because we know our audience, our demos, and most of them want to be like you one day, professionally speaking, running a large business. You're from Southern California.
Yep.
PV.
Yep.
Yeah, up on the hill.
Yep.
Not a bad spot.
Yeah. Torrance and Palos Verdes.
Pain in the ass to get to.
Yeah. Oh, yeah.
But that's what's nice about it.
Yeah. Yeah. Very isolated, but great place to grow up.
Yeah. Palos Verdes, for the audience, especially the west-facing side of the hill, you feel like you're like in the Amalfi Coast. Like it's incredible.
We had this strange dynamic where we happened to have about 10 guys that were like 6'8" and up in a 5-year period. So some of the names, Bill Lambier, he grew up there.
Did he really?
Yeah, sure did.
Man, he doesn't strike me as a PV
guy.
I
know. Jay Billis from ESPN.
Yeah.
Was my teammate in high school. My brother Greg played with the New York Knicks, backed up Patrick Ewing for a while. He's a 7-footer. That Mark and Jeff Akers, played with the Celtics for 5 years.
It's probably if you're super tall and you're crazy successful at basketball or volleyball and you make a bunch of money, of all the places you could choose to live, that'd probably be it.
Yeah, I guess. I know.
Because I lived in Manhattan Beach, right down the hill, and I know you get a spot there.
Yeah.
And like I go, you go have drinks at a bar at the beach or something, and I'm 6'1", 6'2" on paper. And like I'm the shortest guy in the bar. I'm like, I don't like this place, man.
Yeah.
And it's all the basketball, the volleyball.
Guys,
There's a lot of football players, a lot of NFL guys. Like they spend their off season down there. It's a great place. So you grew up, were you always just taller than everyone else?
No, I was a little guy actually.
Yeah.
I get my growth spurt late, so the advantage for me in basketball was I was a guard. I was, in 8th grade. I was
you had to develop handles and shot.
Develop the handles and shot. I was probably 5'8" in 8th grade, and I was 9th man on the bench. I mean, I was deep. I didn't play much
at
all.
Was your dad tall?
Dad's about 6'3". Yeah.
Okay,
yeah.
so
I just for whatever reason, my younger brother Greg, like I said, 7 feet, but he was 6'9" by 8th grade. So
you lived under power lines.
Something happened. I'm not sure what it was, but I was not that guy. I was a baseball player, and I happened to play a little basketball on the side. And then my freshman year, I grew up to 6'1", but I could play a little bit with the ball. I could shoot. I could handle the ball, and then I kept growing and got to 6'8" or whatever in my high school career. But basketball was not my thing. It was sort of something I grew into. I love soccer. I love baseball. And then basketball just sort of happened. And I got a couple of great, mentor coaches. One guy that just grabbed me and said, "Hey, listen, we're going to have you go over here and play with the guards every practice and dribble with those guys and shoot with those guys." And so I became a 6'8" guy with a little bit of a
which nowadays that's the way is you see the big guys playing outside the arc, but back when you played, they probably, as you got taller, eventually like, hey, you got to go down near the basket.
First thing out of any coach's mouth is just back to the basket. Go down to that block and go stand there and ask for the ball.
So much. So you end up going to play at Cal. Was that where you always wanted to go?
I didn't have that. It's just funny, looking back at that. I remember my older brother applied to a place called UC Berkeley. And then I used to watch this team on TV down in LA called California. Yeah. And I didn't put 2 and 2 together. So even when they called the first time, they said, "This is, a coach from California." And I didn't know that was UC Berkeley. So, but as I proceed along, my dad was always very academic oriented, and he pushed us on school. He never, somebody asked me this the other day, he said, "Did your dad really push you guys into sports?" And I said, "My dad never shot a basket with us in the driveway. I mean, it was just never once." And we had 2 guys get drafted in the NBA, 2 other guys play college. So a lot of guys that, we played a lot by ourselves, but he was focused on academics, and that was his main thing. So for me, it came down to an academic school. So I got down to Stanford and Cal, and I took a visit to Harvard and was not an East Coast guy. I didn't like the snow and all that stuff. So I quickly,
PV, it's a tough one.
No scholarships at Harvard.
It's like a 6-hour flight.
So I quickly eliminated that one. So I came down to Stanford and Cal, and end up choosing Cal.
You just spoke to you don't like deodorant. You protest wars. You down with the men. Like,
just the opposite.
Did you have long hair and a beard?
I tell you, just the opposite. I went to Stanford the first weekend, got there, and I love Stanford, but it was really boring weekend. Went to 2 movies, just kind of sat in the dorm, and then the following weekend, I get picked up by this guy Mark McNamara, who played in the NBA for 12 years, big 7-footer. He puts me in the back. I'm 17 years old. He tosses a sheet back and said, "We're going to a toga party at the SE house." I said, "Great." We get the toga party, and it's a toga party like you would expect a fraternity. So that was fun. Got to the game the next morning, and these guys were passing beers down. They buried him underneath the stadium, and we're in the middle of that one. Sun's out. Shirts are off, feeling great, going to San Francisco that night. I'm 17 and somehow these guys got me into a bar, and I'm with him and his buddies, and all these ladies are 25 or 26. And
just having a great time. Well, see, a lot of people don't realize that about Cal, because if you're not from California, even Southern California, because there's so much, you have the weekender, you're up there a lot, but they don't realize Cal, because of the reputation, is this crazy kind of cultural Marxist place. Like, it's got a phenomenal business school. It's got a really great Greek scene, or at least when I was there. So two of my friends from high school went up there. They joined fraternities in the business school. They loved it. And they actually have, when they're doing all right, they have a pretty decent, for California, like football following, like their fans.
Yeah, very much. Yeah.
My senior year, the only game we lost, it was triple overtime. It was a tough game. Was at night in Strawberry Canyon, and it was loud. It was rocking. And, it's Stanford. No matter how good they are, they struggle to get people to their games. But Cal, like, that place gets loud.
Yeah, when they're good, it gets really big and really crowded. And you look back at Cal. SC is obviously SC, but Cal, when you look at the roster of guys that have come through, Aaron Rodgers and Marshawn Lynch and Deshaun Jackson and Tony Gonzalez. These guys are top 50 in NFL.
All those guys are probably Hall of
Famers, right? Yeah. So that was the kind of talent they get through. I don't think Cal gets the consistent talent that USC gets, the depth, let's say. But they get, occasionally they get those kind of guys, like those 4 guys that really make it a fun thing to watch.
So you played basketball in college. What was it like to be a student athlete but you also probably were taking your academics pretty seriously too. How did you balance those?
Yeah, very much. As I said, my dad was really focused on academics. So I got into business school, did the business school route. I hurt my knee my junior year, I think. So I ended up having a 5th year. And so I graduated 4 and then started my MBA, my 5th year. So my last year as a basketball player, I was an MBA student, a grad student, which I think was kind of unique in those days.
More so now, kids are probably better guided, at least a lot of. But it's crazy to me, the athletes who don't take advantage, if they're on scholarship, to actually try and accelerate their learning to graduate. Some can in 3, but 3 or 4, and then if you're there, they kind of walk you into the business school.
Yeah. I think I look at it now. We always talk about student athletes. I'm starting to feel like it looks like to me like athlete student. Because it's a full-time job. My daughter, plays beach volleyball, and she, it's a 40-hour job.
It's pretty intense.
In those days,
I think you can make money now.
Yeah, you can make money. Yeah, so
definitely football and basketball.
Yeah, 100%. But so I was focused on academics. I just thought, my dad thought, business school would be a great route. And I remember walking in my first day to Cal, and the academic counselor was there, and she said, "Oh, well, here's these 3 courses you need to take, for your first year." And one was, basket weaving 101. The other one was, something else. And I said, well, I can't, because I need to have these 3 courses to get into the business school, because you had to apply your junior year. Oh. She said, well, we don't suggest that. We don't think that's the right answer. And I said, well, that's what I'm going to do. And she said, okay, well, if it doesn't work out, then when you come back, you gotta get back on our schedule. I said, that's fine.
Because you're an athlete, they were trying to guide you to easier classes.
They thought it was going to be tough to transition and make the,
they did that at USC,
the sports stuff. And I just said, no, I kind of had my own path, and I wanted to do that. So I did it, and it worked out, and was able to get in the business school. And, I definitely thought of academics, and I never thought of basketball as like, I'm going to be a pro and let me just forget all this other stuff, because I always, it was always like, I'm Dave Butler, I'm a student, and I happen to play basketball. That was kind of my
Speaking
view.
of basketball, how'd your career go at Cal? You ended up getting drafted, but
Yeah, it was a great career. So I got to start my whole career and played with some great players. Kevin Johnson, the Phoenix Suns All-Star. He was our point guard, and we tell a story about my first 2 years we were probably mid-tier kind of team. We were probably 16 wins, 14 losses. Last two we won 20, 22, 23 wins.
Make it to the tourney?
We went to the NIT both years because in those days they only took 2 teams from the Pac-10, and we came in third both years. So
UCLA was probably always one of them.
Yeah, UCLA had Reggie Miller, and then Arizona was Steve Kerr and Sean Elliott and those guys. And so we kind of split with those guys a couple times, but we came in third both years. But we did. The one story we always tell is there's a streak. UCLA had beaten Cal 52 times in a row. So 26 years, and we had a new coach come in, and he, put a little poster on his table and said the streak stops here. And so he went to his first press conference, said we're going to end the streak, and came in and ended it first year. Yeah. So we beat Reggie.
Big toga party that night.
Don't remember.
There you go. So you get drafted by the Celtics. What round? Like, how did that all go?
Yeah, fifth round.
So you didn't want to go to Harvard, but it's like
I know. Yeah, the Celtics. But it was fifth rounder. I was I thought I had a chance to make it. One of those guys. You and I were talking earlier. Good scrappy guys, work hard. Probably not the most talented guy, but could do some things that were good enough. And so I was prepping up that summer, and a strike came about. The night before I was going to go to Celtic camp, and my agent called me and said, this strike's going to last the whole year, so don't even bother going. Just we're going to go find you something in Europe. And so, and unfortunately, he found me. I went over to Turkey, to Istanbul. They asked me to come over and try out, and they would give me $5,000 for 4 days in Turkey, and I had $237 in my bank.
Turns out it was 5,000 lira, which is equivalent of 27 cents American dollars.
Yeah, if I would have known, if I would have had you around, I would have known.
Is lira the Turkish?
Yeah, Turkish lira. It's Turkish lira. Yeah, that's it. Yeah, there you go.
That's my calling.
Went over there, got my $5,000, was in great shape, so I played well, and they offered me a contract that was 2 times what I would have made as a rookie in the NBA. So I was like, kind of weighing all that stuff. I'm not going to get to play this year because of strike, and I'm going to get 2X. I'll go over there, get my game together, learn how to score better, and then I'll come back and make the NBA. That was the master plan.
And what happened?
I'd say about 3/4 into the season, I ended up doing a up and back drill and heard something snap in the back of my Achilles, and it wasn't my Achilles. It was actually my gastrocs, my calf muscle, snapped and just popped, and disaster. So I
it's hard being big, man.
Yeah, it really is. Yeah,
I got some big guys in my family, and it just humans aren't meant to be that.
No,
that big.
No, stuff happens, right?
It's just like you just don't. It's like the things aren't screwed in.
Yeah, like the levers are too long. Yeah. So knock on wood. I don't have any fake hips. I don't have any, knee replacements yet. My brother, the guy I mentioned, just had both hips replaced. So I'm actually feeling pretty good about the way it kind of all turned out.
We were talking about my Uncle Bruce. It's really hard to be big in the sense tall and big. It's like that.
Has he slimmed down quite a bit since his playing days?
Depends on what time of the year. He might listen to this. No, last time I saw him, he looked great. But Matthews in general can be a little manic. Like he could, Bruce could be 350, he could be 290. It just depends.
Yeah.
If one of his kids have a wedding coming up, he's going to look great.
Yeah.
If it's off season,
there you go.
A little heavy, but no, he's doing well. So what was it like personally, processing that you weren't going to play basketball and that you had to go find a normal job? Be a regular Joe.
Well, you know how it is. You don't ever really think that you can't do it. So you assume you're going to find a way to do it. So, what I did when I had that injury, I came back that summer from Turkey and I tried to rehab it and get a little bit back in shape. And I knew I wasn't the player I was. I knew I couldn't go, full time every day. So I actually ended up getting an offer in Japan for the following year. So I thought, okay, it's 2 days a week. It was Mondays and Fridays, game Friday, practice Monday. And I thought I could do that. So I went over to Yokohama, Japan for my next season, played a year there. Then I came back and thought, my calf still is not back, but I can go back to Cal, go finish my MBA, and get my rehab from the team, the local Cal athletic training team, and see if I can get that back in shape. So I did that. I interviewed a few different places when I was getting my MBA with, on Wall Street, but still had that vision. I don't want to leave it on the table. I want to play. So I basically kind of said, no, I wouldn't do a real job. I wanted to go play. So I went down to LA, played in the Pro Summer League, and got a couple offers from some European teams, and I ended up taking a job in Birmingham, England, which I thought was going to be this great, London toga parties, a lot of fun and all that stuff. And it turned out it was, it's about 2 hours north of London.
Birmingham's like a pretty industrial town.
Very industrial and very dark, very gloomy.
Yeah.
So I was up there,
a lot of
bad
drinking,
leg,
a lot of drinking.
And basketball court was like a supermarket floor, the kind of, it wasn't wood. And it was, I definitely had that moment about a month into it where I'm like, man, this ain't going where I thought it was going. I'm not heading to the NBA. I'm just kind of killing my time. So right about that time, I got a phone call. My mom called me in Europe and said, hey, one of the big investment banks just called. They want you to come take a job in New York. And so that was like a Saturday morning, and wow. I thought,
how did your mom know that? Did they send a letter or something?
I think I'd put my phone number. Those days we didn't have cell phones. We had our home phone.
Left a voicemail.
Yeah, I left a voicemail from my mom, and so she relayed that. So I called in, and they said, "Yeah, we'd love to have you start." And so I went in Saturday morning, told the coach that the basketball days are over, the dream's over. I'm going to go take this job. So I flew Sunday to New York. My younger brother Greg was there because he playing with the Knicks. He had a suit. He had a 7-foot suit when I'm about 6'8", so looking a little baggy. But
that was the style.
That was the style.
You remember that? Was it 1996 NBA draft class? Like it was an incredible draft. I think it was Kobe and Garnett. But they have a photo of them all lined up. I mean, there's some baggy suits.
Yeah, big square baggy suits. Yeah. Those are.
It's only a matter of time before that style comes back.
Well, we're keeping them. We're keeping them in our closet, right? Yeah.
You know what? Actually, now that I say that, I feel like I'm starting to see baggy clothes, like baggy suits, like double pleated cuffs. I saw there was double breasted suits are back. Yeah. So there's only so many ways you can wear clothes. So like all the styles are just like you see the mustaches are coming back, short longs. The
Southern California beach look. The bathing suits are starting to look more like we did. But anyway, so Sunday night I came back and
so many of my teammates really struggled with mourning, processing the 5 stages of grief. They get stuck in denial. With the end of their dreams or athletic career, whether it's to make the NBA, the NFL. Was that ever a challenge for you? Was there ever moments where you're working at the investment bank 6-12 months in and you're like, man, maybe I should go back and play basketball?
No,
that's rare. That's very rare.
Yeah. And I think, it doesn't sound lucky at the time, but I think that injury was sort of lucky in terms of just moving me on and being flexible. I mean, I knew by Saturday morning when I walked in and talked to the coach that I had nothing left in my leg. I couldn't play. I couldn't go every day without taking a ton of Indocin and Motrin and icing it every night and keeping my foot up. And I was just hanging on at that point. And I was a pretty athletic guy, so I could jump a little bit, I could run a little bit, and I could all I was doing at that point was just shooting 3-pointers and kind of faking my way through it. And it wasn't fun. It was very painful. So by that weekend, I was like, it's time to move on.
So you're ready. But what I'd say, and again, some of this is just from my own experience, when that day comes, you're like, no, I'm ready to move on.
Yeah.
And for a day, a week, a month, a year, you are. Yeah. But were there ever moments in your professional career where like the NBA is on and you're like, gosh, man, like maybe my calf is healed. Maybe,
Well, we were talking about that earlier. Yeah. You played against guys and with guys and, guys that made the NFL or didn't make the NFL, or for me, made the NBA or didn't make the NBA. And you see somebody on TV and it's like, I used to score 25 against that guy nightly, and that guy's in the NBA and I'm not, or on the other side, there were guys that I couldn't believe how good they were, and they were over in Europe, hardly making anything in some small country somewhere. And so, you know how it is. Sometimes there's the obvious guys, and you mentioned Troy, and there's guys in the NBA that I've thought, this guy's clearly an NBA guy. I mean, there's no doubt. David Robinson, I played with David Robinson. I'm like, that guy's a whole different person.
Freak.
But there's a lot of other guys on the edge that you kind of look at and go, I coulda, woulda, shoulda. But, as you know in life, that's no way to go through life. The old
I
coulda,
agree,
woulda,
but
shoulda.
and again, you push back. I don't know if it was different for your teammates. And again, in basketball, you have 10 teammates. I have a much kind of wider funnel to choose from.
Yeah.
Because in football, you have 100 teammates, so
Yeah.
you get to see 100 people and what happens to them after they're gone, and it just seems like an overwhelming majority really just, in many ways, never move on. They go and get a job, they go and earn a living, but they just like, there's just a mourning that is to this day taking place.
Yeah, I think you're tied up as you somebody once said, I saw him in a bar in New York, the guy said, you used to be Dave Butler. I'm like, nah, I still am Dave Butler, But it's like, I think people connect into this view, and I tell my daughters and my sons this too, like look, you're not, Macy Butler volleyball player, you're Macy Butler student, daughter, good person. You happen to have some skill to play volleyball. That's it. Like, and so I always try to take the mentality of like, basketball was a nice side gig, and I was pretty good at it, and that was great. But I never wanted to make my whole life built around this idea that I'm a basketball guy. And I'm not sure why that got into my psyche or my mentality, but that was always really important to me. I wanted to be. I should look back, USC. I'll mention this real quick. When I was growing up, I always had this thing. I wanted to be a Rhodes Scholar. And Pat Hayden was that guy, like a Southern California guy.
Played with my dad.
Pat Hayden, and then this guy, Senator Bill Bradley. He was the basketball guy that was a. So I looked at those guys and I said, that's who I want to be like. And so I think it's this idea when you're growing up, and they always say it's always great to have something to look up to, like some, and it wasn't just those guys as basketball or football players, as those guys as these balanced, smart, academic, people who actually were good at sports. So that was kind of my thing.
That's a blessing. It's however it happened. I mean, you gave us a color on how you think you were able to process it so efficiently. You started investment bank. How was that?
That was interesting.
Interesting never means interesting. What do you mean?
Right. So,
I mean, I hear stories of the work-life balance.
In
investment banking, lack thereof. What was that like?
Every young kid recognizes. I mean, when you start that first job, you go from this super fun college experience to like.
Was that what happened to you?
I'm sitting at a desk for like 9 to 10 to 15 hours a day, and that's different. And so, I do remember that being a change and an adjustment. And when you're built as an athlete mentally and physically, you're ready to move, you're ready to jump, you're ready to run, you're ready to sprint. And here you are stuck in the desk for 10 or 15 hours. So that was hard. But for me, I think the bigger thing and what kind of led to this career was I sort of watched the way Wall Street worked in those days. And it was really about, I guess you could say it's still about that today. It's like about making money. And it wasn't really about the client or about the experience of the investor, let's say. It was really about, transacting. And in those days, again, it was me as a broker. How am I going to get you to transact? And how am I going to get you to trade?
Brokers would never do that.
No. And so
not real estate brokers. We have much higher level moral fabric for sure.
There you go. But I think the emotion, right?
Yeah.
So if I could get I could get you greedy, I could tap into your fear around the markets, and I could get you to trade, then I would make more money.
You're like that McConaughey character in Wolf of Wall Street. Just keep them on the merry-go-round.
Yeah, 100%. Yeah.
With the next big idea. Well, give us a couple crazy stories from your investment banking days early on, like just things people wouldn't believe.
Well, I mean, there's all kinds of crazy stuff that you probably wouldn't believe, but
you tell me. And if later tonight you're like, I shouldn't have said it, we can always edit it out.
Yeah, I would.
You don't have to name names.
I'll go down a path, and I tell this story on occasion around my own experience. So I'm an MBA and I'm working on my CFA. I'm an investment guy. I think I can do it, like we all do. We think this stock or that stock's going to go up or go down. So I had a system called CanSlim, and there was an old newspaper called Investors Business Daily. CanSlim was a system that where you looked at certain aspects of a particular stock. So C stood for current earnings, L stood for leverage, M was momentum. So you look at these 7 different areas of a particular stock and decide whether you want to buy it or not. So I had this stockbroker named Tom. Tom called me up and said, hey, there's this great idea called Boston Chicken. I don't know if you remember that. Remember Boston Market turned into Boston Market.
Yeah.
Boston Chicken was his new chicken brand and all this stuff. And so I took the idea, went off, did my Can Slim thing, loved it, thought the stock was amazing. I thought it was going to go up. And so I had, in that year, it was 1994, I was 7-0. So every stock that I had picked, I hit. And thought I was the guy, and I knew how to do it. So I see this Boston Chicken, it's a home run, 100%. It's trading at 16. It's going to 23. All the all-star analysts at the investment bank were suggesting the same thing. And so I load up, I put 80% of my money into Boston Chicken.
You did it.
I did it. Earnings come out, I'm in Utah at the time for a business meeting. I go down to the shop.
You're looking at a chalet to buy.
Yeah.
Ski in, ski out.
Feeling great. This is, maybe go back, play a little basketball, the whole thing. And so I get down there, I get to the little store at the bottom of the hotel and, pull the paper out, and I couldn't get hold of my broker for some reason. I go down to BAB Boston Chicken, look down and it says 7, and from 16.
It's got smashed.
And then I look, I noticed there's like a little crease in the paper. I thought, oh, maybe there's a 1, in there. I was like, pop the crease open, no 1. Call my guy up and he said, hey, he goes, just didn't turn out the way we'd hoped to. Sorry about that. And that was sort of like, for me, that was sort of that wake up moment where he's like, this guy really didn't have any interest in me as a client. He was interested in me transacting and making the trade, And so I just kind of had this moment, like we all do when we're young. I just kind of went through the mentality of like, what am I doing? I'm in New York. I'm not in California. I'm not doing something I feel good about. I'm not seeing a real result for the end client, if you will. And so I had made a commitment to myself that I was going to quit and go be a teacher and a basketball coach in California. I was going to do that by the end of the year. And randomly, luckily,
I was going to say, what happened?
I was reading the Wall Street Journal one day on the desk and looked down, and 17th page, bottom right corner, was this little ad that said money manager, Santa Monica, California. I liked the 3 words, Santa Monica, California. So I sent a resume, and I didn't know who it was or what it was. Turned out it was Dimensional. And I went out Christmas break in 94, went up to the 11th floor. They had this beautiful building in Santa Monica. You probably know it, Ocean in Arizona.
Yeah.
Overlooking the water.
Mm-hmm. Was it a big white one?
Yeah. It kind of looked triangular. Yeah.
It's like the only mid-rise in the city.
Yeah, exactly. Yeah. And went up to the top floor where they were. And this guy, Merton Miller, the Nobel Prize winner, comes out with David Booth, who's the founder and chairman of Dimensional. And a guy who hired me, who became my mentor, and one of the guys that started the whole advice business at Dimensional, Dan Wheeler, came up in the elevator area as well. And David comes up and says, "Hey, I got another meeting. Would you mind taking Merton Miller with you to lunch to this guy Dan?" And so Dan and myself and Merton Miller, Nobel Prize winner, sat down for my interview. And I thought, this is kind of interesting. Nobel Prize winner on an interview. That's pretty cool.
Not bad.
And that's where he kind of said those 3 things. He said, look, here's how we invest. Here's how you ought to think as an investor. And if you do those 3 things, diversification, markets work, keep your costs low, you're going to be really well off as an investor. And it was so refreshing and so interesting the way he described it compared to what I had lived through the last 3.5 years in New York. That I thought, I want to spend more time understanding this. And that's kind of that was the start of my Dimensional time.
A young man headed west, 95 to 25, 30 years. You go from that interview, you get hired, CEO. What are some things, and it's hard to be accurate in self-assessment, but like, what are some things that you believe you did that allowed you to, that upward mobility to become, eventually the head? Like, looking back, you're like, man, I'm glad I did those things.
Yeah. People always ask that question, did you think you were going to be CEO? And I can honestly say I'd never had any vision or view of being a CEO. I'm a big believer. I don't think the white picket fence, the end, result is really there or really necessary for people to have success. I'm a believer in kind of the day to day. So I like to tell people, if you're young and you have ambitions to something bigger, don't make that ambition your end goal. I just focus on the daily wins, right? So just stack the wins. Mm-hmm. And if you are working within an environment and you continually meet expectations, then your manager, your boss, and so forth, they're going to trust you with something bigger and bigger. So stack the small wins together, those small wins then translate to bigger opportunities. Bigger opportunities translate into that potentially that role or that end spot that you want to get to. And I think that's something I took from basketball back in the old days. Is they, as you know, they don't put you in as a freshman to go and shoot 20 times. They put you in and say, just don't screw it up, And then they say the next time, if you don't screw it up for a minute or two, they put you in and say, okay, go get a rebound. Okay, get a rebound. Next time they put you in and say, okay, you can take a shot inside the lane. Yeah, one shot. And then eventually you get to the point where you're the guy that gets to take all the shots.
Yeah, it just happens gradually. So, but it's a matter of the coach trusting you. So he's going to look at the end of the bench and go like, who can I put in here that's not going to, screw things up and going to do it, in a way that meets my expectations. And so I've tried to take that from my basketball career. And I think all through, the business, I think it's really about meeting expectations, whether it's a client or it's a vendor or anybody else you're working with. You got to do it in a way that people walk away and go, that was good. Meeting expectations 24 hours at a time. I agree 100%. What is another professional? Make sure to do this. Here's a great way to shine.
Yeah. Well, you've seen it in locker rooms too. I mean, be optimistic. Yeah, bring in some energy. Don't come in and
don't be negative.
Sit in the corner. Don't be negative.
Negative is bad.
And be a team player. I'm a big believer, and sometimes it doesn't seem to work out that way. But you don't need to raise your hand. Like prop up the other guy. Be a great teammate. Be optimistic. Be energetic. And then when something's asked of you, then hit the expectation or exceed it. And that body of work, I think people will say, okay, this guy's a team player. We like to be around him. There's a lot of times in sports too, unless you're, as the guys we talked about, Troy Paloma, how do you say Troy's last name? Polamalu. Or you're David Robinson. I mean, those guys are different people, but if you're like us and you're the guy that's the 9th or 10th or 12th man on the team or the 40th guy on the football team. 86 team, whatever
I'll
it
take
is.
9th or 10th.
Yeah. Well, I'm talking basketball.
I know. I'm going to use that. It's like, listen, I was the 8th, 9th, 10th guy.
Yeah, there you go. Yeah. I mean, you're interchangeable at that point.
There's 22 starters.
Yeah, you're either somebody that coaches can rely on and like, or you're not. And if you're not, they can go get another guy that's going to be a 10th man.
For sure.
So I just take the view that you have to, in life, you have to be somebody that people, they want you around, and then hopefully you've got an ability to deliver on expectations in a way that happens on a regular basis.
One of the things we've been talking about recently, it's come up on a couple of recent podcasts. We talk about job description, because I heard you say like, hey, like, when your boss asks you to do something, you do it. Like, volunteer, right? It's about job description. It's like we all have a job description. When you got hired by investment bank or hired by Dimensional, there's a job description. And I said, look, always make sure you fulfill that job description. But your job is whatever your boss needs. Right. 100%. And obviously, most of the time it's going to fall within the job description. Yeah. But if your boss says, hey, who can stay late to do this thing? And it's not I can do that. Don't say, well, that's not my job description.
Yeah.
Or, hey, there's a coffee machine. It's out of coffee. Like, that's my job description. My job description is whatever my boss needs. Like, do you agree that that's the right mentality to have for someone who wants to be upwardly mobile?
And I don't have to tell you guys, obviously, your family and you and the careers you guys have had. I mean, it's have some grit. Work hard, stay late. I remember my dad saying that too. He was a CPA, and he'd say, whenever the partner gets in, you get in a half an hour early. And whenever the partner leaves, you leave a half an hour later. And that was his one line, which basically said, work hard, because, if you work hard over time, it's going to translate into, again, opportunity. And, I think bosses are looking for people that are going to be proactive around helping them out. I had a lady who was my boss back in the early 90s. And I just always remember saying, just take something off my desk and bring it back better than I expect. And she'd say that every time, like every once a week. And I always, I've always kept that in my head, because it's like, it's great to be somebody who I guess reactively handles things well, but it's even better to be somebody who proactively handles things well.
Agreed. It's funny, the best advice, at least in my experience, is almost always the most simply delivered. Like, 100%. Take this off my desk and bring it back better.
Yeah, that's all you need to know. And you do that, 1, 2, 3, 4, 10 times. People are gonna, when the managers sit around and go, who should we get to do X, Y, and Z? It's always that person that actually has met the expectations.
There's someone I look up to very much in, real estate, and early in my career, we were talking about like hours, it's like, well, what hours should I work? And he just was like, all of them.
Yeah.
And it was so simple, and it stuck with me to this day.
Yeah.
And, that's not the case anymore, obviously, with when you got family and children and all that, but
yeah.
especially pre-kids, all of them. And so I want to touch on that. We often, ask questions centered around work-life balance, and you have perspective now. I'm going to make an assumption, push back if I'm wrong. Early in your career, you did not have as defined today as work-life balance. Did you ever, kind of work through that equation in your head? Like, man, like why I'm just working all the time. Like, why don't I have balance in my life? Or what advice would you have for young people who, especially generationally, this generation, newer professionals probably have been introduced to that concept much earlier than perhaps your and I's generation?
Yeah. I think the difference maybe, when we grew up was the expectation around speed of getting somewhere.
It's much less, right?
Much less, and I think in sports or anything else, it was sort of like you came into a sports team and you were fourth string, and that was okay. And it's going to take you some time. It can be by your junior, senior year.
I was going to say for us, like most of it is like, okay, I'm going to redshirt, and then freshman year, if I get on the field, maybe sophomore year, I might get some plays, and if maybe by my junior year, I could be a contributor / starter.
Yeah. So I think much more difficult for the kids today.
Yeah, that's a good point.
When you're 25, there's, one guy out of your group is going to have started a company and become a millionaire at 25, and he's out doing whatever he's doing, and you're sitting there grinding away at some job that seems difficult.
You start saying, what am I doing wrong? And the answer really is nothing.
Nothing. I mean, and we didn't have that pressure. We didn't have that guy or gal that actually hit it big at 25. So, we all just said, listen, your first 10 years in business, and in real estate, I mean,
it's
one of my best friends from Cal, I'm in commercial real estate. You're going and you're grinding, and then you're going to have financial and career success at some point, but it doesn't happen without that foundation of grinding and the grit that takes it. So you just have to sort of, in my mind, you have to recognize it to get to the highest level or whatever level you want. You got to put the reps in, and sports is great around that because you see that in the sense that you got to shoot thousands of shots to become a great 3-point shooter. You got to lift lots of weights to be the fastest, strongest guy on the football field, and that's just part of the grind. And something again, I'll say you have to love it. You have to recognize that process and the love for that process is really. It is when you look back, if you've quote unquote succeeded, or you're some age and you've got some title or position, it's like, I personally don't really care about my title or I don't care about my compensation, but I do look back and take pride in, working hard. Mm-hmm. It's at certain points in my career where I said, that was hard work that translated into a good outcome. And you'll never have that taken away from you. So I think that's kind of the lesson I tell younger people.
What's the worst thing that's ever happened to you in your career? It could be a personal thing, but in your career where when it happened, you may have felt like a victim. I can't believe this happened to me. This is the worst thing ever. I'm never going to overcome that. And then how ultimately did you overcome the adversity of whatever that thing is?
Yeah, I would say that I love talking about this because this is something I talk with my kids now. They're all in their early 20s. It's like everybody thinks there's this straight shot, this path to something, right? Path to CEO. And and I know, I mean, you're going to bounce around and you're going to wiggle around this line quite a bit. And some things are going to bump you one direction. Some things are going to bump you back the other direction.
Sometimes backwards.
Yeah. And at some point it's going to all shake out and you're going to meet an entity, firm, or you're going to meet a mentor. I mean, this guy, Dan Wheeler, that I mentioned earlier, I mean, that was my guy. That guy made me who I am today and gave me the lessons and the vision and the optimism that's really kind of developed me in a great way. So I think even, my view is even things that seem bad in the moment, my injury to my calf, I could have been an NBA guy, coulda, woulda, shoulda, but I wasn't. And that was part of my deal. The fact that I'm, 6'9" and not 6'1", that was part of my deal. So I don't think you can look back at things and say that was a bad thing. But to your point, absolutely there have been points in time where, you hit the wall and you go, this is not working out. I mean, when I was sitting there, this is a great story after the fact, but when I was sitting there reading the newspaper in New York, looking at, an ad that says Santa Monica, California, I was like, man, this ain't working, and I don't feel good about what I'm doing, and I don't feel good about myself, and I just need to maybe just completely pivot and go be a teacher and a coach, because I think maybe that would make me feel good, And that was where I was. So it wasn't like, oh, well, you're going to pivot and you're going to find this firm called Dimensional, and then 30 years later you're going to be CEO. That wasn't it, right? So I think, particularly for young people, there's nothing wrong with changing directions. In my view, I think you don't want to be a baby and you don't want to give up on stuff. You have to give things a hard run. But at some point too, if things aren't working for various reasons, you have to recognize that you need to pivot and find something that you're passionate about, that you love, and so forth. And that'll give you a chance to really succeed.
I want to get back to investing, financial markets. Like you see so many experts trying to predict the market, right? Yeah. Kramer is always the one I point to. Inverse Kramer. Yeah. Isn't there an ETF where you like do opposite and it's up like 60%? No, I mean, he knows much more than I do, but there's so many experts. What's the biggest myth or the biggest lie about investing? I'm going to ask you a couple questions here. Are there a couple places of information that you strongly advise people if they do want to direct some of their or part of their portfolio, and maybe not go through Dimensional for all of it, but are there places of information that you do recommend people look into or read or subscribe to? And then what are maybe a couple places you say, hey, stay away from that?
Yeah, I get that question quite often. I get questions from my neighbors, and people that want to know, and I always tell them, I mean, look, it's a turbulent world out there, and there's a lot of information coming at you, and it feels like you're on this ship and you're bouncing around and you don't know what to do. And the whole point is to try to like minimize that noise, right? And if you can block that out, and we have a term called a transformed investor. If you can block that out and get to a disciplined, kind of simple vision of the markets, then you're going to be in pretty good shape. It's not easy. And even for somebody like myself who's been doing it for 30 years, do I have an opinion about where the market's going to go? Absolutely. Do I invest my money based upon that opinion? Absolutely not. I have a view based on a lot of data in the markets on how to invest my money. So when I hear, Kramer, or I hear some other,
Nancy
pundit, right? Yeah, whoever it might be who says this is going to happen.
You want to beat the market, just follow.
Yeah, that's true. That's an insider. Who knows what's going on there? But I think like sports, it's the discipline around trying to avoid listening and reacting. So when you get ready to play in a football game, basketball game, you rep, you do plays, you run, and then you get out there on the field and something hits you, right? It's the quarterback's better than you thought. The guy you're playing against is bigger and stronger than you thought. That's the market. The market's is going to move and it's going to transact in a way that you can't do anything about. But what you have to do is you got to rely back on your plan. So my view is always, if you can transform your thought process and get away from the belief that whatever's in the paper today, you have to react to. That is the old definition of investment advice. The redefinition of investment advice is you don't need to do any of that to be able to be a successful investor. So avoid that, avoid the emotion, and get to the basics. And again, that's where an advisor is really helpful from a discipline perspective. So investing is all about discipline. It's all about mentally staying clear around what your goal is, keeping your costs low, being diversified, and then and minimizing taxes. If you do that, you're going to be better than 99% of the people out there. Most people can't do that. That's the problem.
It takes so much discipline.
So much discipline. Yeah.
I like to think I have some level of discipline. Yeah. In some facets of my life, I do, and some I don't.
Yeah.
Bitcoin for me is one, right? And I've maintained discipline in the sense, like, I got buddies who bought Bitcoin. They still can't explain it to me. Yeah. But they bought right and they've crushed it. Yeah. And I'm just like, I'm not going to, because I don't understand it. I mean, I understand
right.
some aspects of it. I was going to say, like, but I don't really understand how it is used in everyday life. They're like, oh, it's a transaction ledger, right? It's blockchain technology. It's you can't it's not fungible. You can't go in and mess with the records. And I'm like, okay, but explain how people are going to use it. Like nobody can. So how does someone like, I guess I'll ask a Bitcoin question. Let's probably get some clicks here. The Bitcoin crowd is like about that life.
Yeah,
like
yeah.
you talk poorly about Bitcoin, they'll come after you.
Better be careful.
They'll leave you nasty comments. Give me your thoughts on Bitcoin. And then how do you, when you get clients who call up like, I put me in Bitcoin, you're like, well, hold on,
Well, to your point, I think people that oftentimes invest in those types of, alternatives don't really know what they invest in. And sometimes they get lucky and sometimes they don't. So, I won't bash alternatives because I think, I don't want to get hit too hard by the Bitcoin crowd, but
let's show up. They'll be picking.
Yeah. I think what I've thought about this a lot over the years, it's sort of, because we all have emotion, you listen to your guys that, I go down the beach and play volleyball and I got 3 guys in my head telling me what they just bought and how much money they made and blah, 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 blah. And it's sort of, the analogy I think about is it's sort of the guy that goes to Vegas and he comes back from the weekend. He's like, oh dude, I made so much. I just killed it. I just was on the blackjack, table and blah, blah, blah.
On average, the house wins.
So somehow or another in your mind as an investor, you have to have that, the house wins on a regular basis. And you have to understand that. But the good news with, equities and the good news with the stock market is you're investing in companies and there's a return associated with companies. Currency is currency. Currency doesn't have an expected return associated with it. So whether it's Bitcoin or, gold or the US dollar or whatever else, I mean, there's not an expectation of productivity from that that's going to give you an excess return. So I think my view is, like Vegas, like you're not going to take your entire net worth and go to Las Vegas and go gamble it. You're going to invest most of your net worth. And but you're a fun guy. I'm a fun guy. Like I'll go to Vegas and if I want to spend, a little bit of money and play the tables, have at it. And so my view with the way most investors ought to think about this is you don't speculate on all your money on things that are speculative. You invest 90% of your money. If you want to take 10% of your money and I do, and you do, and I've got real estate stuff that I invest in and go have fun with it, and then you can listen to the story on the news and you can talk to your buddies on the beach and you can have that conversation. But you're also satisfied by knowing that 90% of your money is in a low cost, transaction efficient, tax efficient portfolio. And that's the one that, again, over every 7 years and over a 20 or 30 or 40 year investment lifetime, that's the one that's going to make you really, really wealthy.
Another topic that is definitely, it's all the buzz right now, more so than Bitcoin. Bitcoin, I like to have fun with, ask a question here and there, but AI, whether you understand it or not, you got to be talking about it. I think there was a graph I saw where the percentage of earnings calls, public CEOs that mentioned AI, over the last 8 quarters is now it's like 93% of earnings calls or something. Yeah. And I said 93% of that 93% has no idea what AI is. I'm not going to ask you if you really understand it in the sense, but what is your opinion on the effect it's going to have on the financial markets, on companies, on investing, on picking stocks, right? On picking ETFs.
It's a huge topic, obviously.
It is. It is the topic.
One that's emotional and one that's real and one that's, so I think my initial reaction or kind of gut reaction is like, it is pushing efficiency, right? And AI is just is a term, right? A buzzword, but AI has been in our world and our systems for a long, long time. It probably just wasn't called AI. So when you think about like, ChatGPT versus, a Google search or something like that, they're kind of variations of the same thing. So they're things that are going to make your processes faster and better and more efficient. So, there's a lot of things that, every department in our company are talking about different applications and different AI tools and so forth that are going to add efficiency to their process. So I think there's 100%, view that, this is going to add efficiency into companies, into processes, into businesses and so forth. So I think it's something that everybody has to address and everybody has to think about. From an investment perspective, I'm not sure how you capture, what AI is or isn't. I mean, it's AI is affecting every company. So if AI affects every company is going to be more profitable or more efficient, then that's going to be a good thing for the overall the market generally. So I think it's a real thing. It's something that we all talk about. We're in the process of going through tons of different applications across departments in our firm, and what's the governance around that? How do we introduce it into the firm? So
seeing which works, which doesn't.
And so I think it's it reminds me of the moment of the internet's kind of back in the early 90s or mid 90s, I guess, when people said the internet's going to change everything, and there's going to be no more storefronts, and there's going to be only the website. And partly true. I mean, you got Amazon, and most people just shop on Amazon, but you still have a lot of stores that actually sell stuff because people like the physical aspect of shopping.
Mm-hmm.
So AI is going to affect things in a pretty big way, just like the internet affected things in a big way. What that is actually going to translate into and mean, this goes back to the market efficiency question. We don't know. We don't know what if it's going to be more or less or what we expect, and I think that's going to reflect over time and what how companies do, and then their efficiency. And as people start to recognize more efficiency, then that'll be more profitability, and that might mean a higher stock price.
I think the internet is the perfect comp or example for AI. And I know 10 years from now, I'll look back on saying that and say, well, it was, but it wasn't. But the internet came in and everybody perhaps overreact. It's going to change everything. There'll be no more storefronts, right? And so that was not true. That was an overreaction. It was hype, right? And I think we're seeing a lot of that in AI and even when you really start diving into a lot of the applications, you're like, this is hype. This isn't super efficient. The language models hallucinate. I can't rely on the data. But then you also can't dismiss it because the internet, getting back to the comparable, it fundamentally changed everything. 100%. And there are certain, for commercial real estate retailers that did not respond to it, and they're gone.
Yeah.
Right. They didn't figure out the how to balance brick and mortar with online and become omnichannel is really what happened. Yeah. And the retailers that responded to the introduction of technology, this is the internet, and leveraged it. Yeah. They became the haves, and then there's the have-nots. Yeah. And I think you'll see a lot of that with,
I think you're right.
With AI, but they're absolutely right now is, it's not as fundamentally altering as perhaps some people are speaking about it, but it also is real. Yeah, and it's, all of our responsibility, both as leaders and as individuals, is to stay educated, and leverage it to the best of your abilities, but don't get away from the fundamentals.
Yeah. I agree with you completely. And I think there's some simple, aspects to it that you go, okay. So if somebody says, listen, we have a tool now that takes notes on the meeting that we're having, and they put in a great form, and it's great. Yeah. So is that more efficient than having a third younger person sit there and take notes as to what the conversation is? Probably. Mm-hmm. What's that mean over time? And does that make, do you multiply that multiple times and get to the point where it's like, wow, everything's 100% more efficient, and we need 80% less time to do whatever function? Then that tells me there's productivity in it, right? And so those types of smaller concepts, when you're broken down, you go, I can see why that would be additive to a business. And again, if a lot of small pieces get added into the process and people get it more efficient, then that's going to be, it's going to be affecting the overall economy, and it's going to affect the stock market and everything else in a pretty significant way, I think.
Yeah. Someone pointed out, it was 100 years ago, the average person worked 7 days a week. Mm-hmm. Right. And as technology, pre-internet, like the tractor, right? It made farming from 7 days to 5 days, right? Something as simple as the car, right? And now you could almost argue we're borderline 4-day work week. It seems like, so, not our company, but a lot of companies lost Fridays in COVID. We become Europe, and someone was saying, as AI really perfects itself and continues to evolve, and it really is improving at an incredible rate, is 5, 10, 15 years from now, you'll be able to 2.5, 3 days do what you did in 5. And if you want to choose to go keep working 5 or 6, you'll get ahead of everyone else. But a lot of people, it'll be 3-day work weeks, and that'll just be the new normal. And they'll look back at you, and I was like, you worked 5, 6 days a week? You're like, yeah, dog.
Yeah. Yeah. I mean, it's a repurposing, right? I remember seeing this great chart a couple weeks ago around, I think 9 out of 10 people in 1920 worked on a farm. Yeah. And, fast forward today, you've got, I think it's like less than 1 out of 10 work on a farm, but the production of farm production is actually, 2x or 3x or 5x or something. And
getting back to the AI example, you could argue the reason, so many jobs were lost in farming, which they were, was because the invention of technology, specifically tractor and mechanized farming.
Yeah.
And you're like, oh my God, all those farmers, they went out of business. They lost their jobs. Some certainly did. And they probably had very hard times, but some became mechanics.
But optimistically, right.
Yeah.
They repurposed, they retrained, and they became something else that was reflective of the society at that time. So, I think, economies like the US and really global, Western economies, they're really good at productivity and repurposing and rethinking how things are done. So, I like to stay optimistic about it as well.
I agree. And I am. I'm not just convincing myself. I always say the truth is in the middle, right? Is AI as revolutionary right now? Probably not. Is it nothing? No way. Like, truth's in the middle. So give me kind of closing question here. I want a truth and a lie. Give me a fundamental truth about investing, about just like, hey, this is a truth about investing. And you can you want to use this as your North Star. And then I'm also going to say, what's the biggest lie about investing that you hear being told? A truth and a lie about investing for people.
Yeah, the truth, I'm going to go back to those three. Cost. High costs hurt you as an investor, so keep your costs low. Second is diversification is a must, is your buddy, if you will. And three is markets work, which means stocks market is a really good information process machine and reflects information quickly into price. And so you and I shouldn't try to outperform the market. That's a kind of a fool's errand, if you will.
What about a lie? Just something that you consistently hear repeated that you're like, that is not true.
This is going to happen in the future.
Huh? Yeah, predictions.
It's crystal ball. Nobody has one. Nobody can predict what's going to happen in the future. They can react to what they see today, and then something is going to be different in the future, but nobody knows what that is. So if somebody truly knew the future, then you should invest on it. But people don't. And we've been playing this game for 50 years, 100 years, a lot of money in it. I can weave a story that's going to make you invest 100% because I've got enough knowledge to figure something out that's going to make you emotionally want to transact.
FOMO.
And that game has not worked out for investors forever. So don't do it. Don't succumb to the emotion. Don't trade. Deploy your assets. Get an advisor. Find somebody who understands discipline, and you could be really well off as an investor.
My next question is: this is going to happen in the future. I want you to predict. I want you to do one ETF to buy. If you had $1 and you had to invest it, where would you invest it?
A global market ETF, if I had to.
Global market ETF. Is there one specifically, like a ticker that I can? Because I'm about to go out here on Robinhood and put a couple million on this thing. So
well, of course, the dimensional one. I don't want to say which one, but
all
dimensional
of them.
core portfolio.
Is there an ETF of dimensional ETFs?
Yeah.
There you go.
We'll walk out of here. We'll get you get you organized.
That's it. That's not insider trading. What is a resource? What is where would you point somebody to? It could be a course. It could be a book. It could be a podcast. Matthew's Mentality. No, it could be anything that has really made a difference in your life and helped you personally, professionally, that you could share with the audience.
Great question. I think my advice would be, find the mentors and observe people, observe how they work, and not just one mentor, but multiple people you respect and you look up to, and open your eyes and observe. We're all a work in progress. So hopefully you and I haven't finished my observation yet. I still see things regularly, daily from people that I respect and think, I had to do more of that, or I'd be more like that, or I'm going to take a note on what that person just did or how they approach things. So I would say just, keep your eyes open and continue to observe. You get old when you stop observing. Once you've figured it all out and you know all the answers, that puts you into the old category. So, I think, try to continue to learn and try to, again, keep your eyes open and observe, people that do things really well.
I'm going to follow up here. How do you How do you get a mentor? You don't go, I think I was asked this question. You don't go and like, hey,
Yeah, be my mentor.
Dave, will you mentor me? I mean, maybe you could. How did you develop these mentors?
Yeah, I don't think I ever called him a mentor. I never said, hey, are you my mentor?
Yeah.
I think it's observation. I think you watch, again, and I spent a lot of time in Europe playing basketball, and, you can't speak the language. And so you end up spending a lot of time watching people, and watching how people react, how they react to stress, how they react to good news or bad news, and so forth. And so I think just, continually asking questions, I think, is a good thing. People sometimes think that means you don't know something, but if you ask questions, that's going to allow you to engage with people that you might not normally engage with. People love talking about themselves. People love talking about concepts that they're involved in. And so the easiest way to learn and observe is to ask questions. So I would say to a young person, lead with questions. Don't think that you're outside the box and you're not competent enough to have a conversation with somebody. You can ask Warren Buffett a question, and or John Wooden a question, and you'll start to get some really insightful views. And so I think that's a great way to continue to build up the library of kind of of yourself. Like who do you want to become, and how do you want to become that?
Your why, your motivation. What is it today, and how has that evolved from when you first got into your profession?
Yeah.
What drives you?
I think you want to do the right thing. I mean, I think, you want to look in the mirror and feel good about what you're doing. I mean, I don't care how much money you have or what kind of title you have. If you did it in a way that somebody would feel like, that's not good. I don't think that's something to be proud of. So, for me, it's sort of a pride thing. I like to be associated with people and with entities that people, when the name comes up, they go, that's great. They do good things, and I think if you're in a career or you're in a path or role that you feel like you're not seeing that, if you wake up in the morning and go, yeah, I'm making good money, or I've got this apartment, or you don't want to do that. You're going to have a career. That's a job. To have a career, you have to have something more, I'd say, spiritual or more mission oriented, to do something for 10 or 20 or 30 or 40 years. And if you don't have that, you're going to bounce from job to job. So I always suggest to people, it's not going to be daily, but there's got to be some process or some kind of bigger picture that makes you feel like, yeah, I'm doing good things.
And that's what you felt when you're in New York, and that's what drove you to Santa Monica.
Yeah.
And now you're here in the middle in Austin, Texas. Beautiful Austin, Texas. A beautiful building. Dave, this is awesome. For everyone listening, be sure to follow Dave Butler on LinkedIn and check out Dimensional Fund Advisors at dimensional.com. And if you found value in this episode, don't forget to follow me on X, Instagram, TikTok, and LinkedIn. Just search Kyle Matthews CEO and catch more inspiring conversations on the Matthews Mentality podcast, wherever you listen. Dave, I appreciate it. I know we ran a little long. You guys, I can feel the heat, dude. He's like, hey. So thank you for the time. This is awesome. And I wish you and Dimensional all the success. I'm gonna call my financial advisor to make sure they're on that Dimensional product. Thank you.
Thank you. Thank you, Kyle.
Appreciate it.
Yeah, no problem.